Alrighty. Well, thank you everyone for joining. Today we have Ryan Stueber with PNW Insurance Group, and Ryan's going to be talking about common questions for real estate agents and their buyers and sellers in regards to buying and selling real estate. So hopefully this is helpful, and then we can kind of do a round table and ask questions and discuss. So thanks, Ryan, for being here.
Cool. Thanks for having me. Yeah, I was gonna do a big old PowerPoint and make it all fancy, but you know what? Those days are gone. That was pre-COVID. We don't do PowerPoints now. We just have good old roundtable discussions. So just a quick little bit about me. So I've been in the insurance industry for 12 years now and own my own independent agency for 11 of those. So definitely been around the block, worked with a lot of lenders, real estate agents over the years, and seen a lot of crazy things, both on the claims side and on the purchase side. So yeah, so I just want to kind of share with you some knowledge that hopefully you can pass on to your buyers and sellers as needed to help them kind of navigate any potential issues with insurance they might come across during their purchase and sales process, and also after, because that's usually when the insurance stuff comes into play, is when they move in and shit goes wrong. So I wanted to kind of start with just understanding like basic things that are covered and aren't covered on home insurance. And this is true of landlord insurance as well. So if you're working with investors, pretty similar. So your home insurance is there and is created to cover any sudden catastrophic type of loss, right? So when the first insurance policy came out, it was just fire, right? And over the years, we added weather events, water damage, theft, vandalism, all things that were added on later on. So now we've got so many little add-on coverages that you can choose that it covers quite a bit. So there are three things though that are not covered in the sudden catastrophic category. Anybody take a shot at naming one of them?
Earthquake.
Yep, earthquake is one. Flood is another. And we get the last one.
I knew flood. I didn't know.
Tornado.
No. Tornadoes are still covered, thankfully, especially in Washington. In Midwest, it's
Volcanic eruption.
no, that's still covered too. So it's actually landslide is the third main one. So that's just good to know. In our area, we do run into flood insurance requirements a lot. A lot of times lenders will require flood insurance if it's in the 100-year floodplain. So know that can come up. You don't see it a ton around here, but if you have buyers, they're like in Boarding Valley or waterfront, sometimes depending on how they're zoned and whether there's been any elevation survey done before, can have a requirement. So it comes up. And so it's just good to know if you have buyers that are buying around water, that may come up, and that if DTI ratio is tight, that can throw things off, because that flood insurance premiums can be $2,500 a year, $3,000 a year.
What's the highest you've seen for flood insurance?
I think over 10,000.
Yeah,
So,
I was gonna say I saw $350 a month once.
yeah, a home actually on the west slope it was built in like 1900s. It was literally over the sound, right? So when the tide came in, it comes right up to the basement, to the ground floor level. So yeah, that one was that's expensive, but typically, if it's in a higher risk zone, you're looking maybe $2,500 a year. And then even if it's not in a high risk zone, you can still get flood insurance, but it's more like $500, $600 a year.
And you can prove you don't need it if you.
Yes.
I did that with my property because they it's like $1,000 a year for insurance for a stream at the bottom of a ravine that literally Gig Harbor would be underwater if that ever became.
Right.
So we had to do a survey and a whole lot of stuff to finally get it removed.
That's the way out of it. So that's what we
An
always.
elevation certificate.
Yeah, well, we always consult, for our buyers is like, okay, hey, if this happens and you are in a high risk flood zone and you're being required, it doesn't necessarily mean the house is actually, within that floodplain. It could be sitting back and up enough where it's not. But what FEMA has done is they basically just gone around every body of water and depression and just painted a red line and said, all right, prove us wrong. And now it's on you to pay $1,000 to a surveyor to come out and do that.
And I waited for nearly 9 years years before I got around to doing it, and I'm like, I should have just done it.
Yeah, think of all the flood insurance premiums you paid over the years. But
Well, and then also like when I've heard that it's such a hard insurance because it's government backed. So it's like, I don't know what experiences you've had getting anything from the government, but it's not quick.
Yeah.
And so, yeah, I've heard it takes a year sometimes.
no, yeah, it doesn't,
Well, that's
it
good.
takes a year maybe to get rid of it on the back end. It can take, it's a lot harder to remove it or change it once it's there, but getting it.
It pays out.
It is easy.
Oh, okay. Well, that's good. So then
Yeah.
I've heard wrong.
The cool thing is now they're finally relaxing the guidelines to allow more private companies back in. So it's not just the FEMA product, which is great.
Well, I wasn't aware of that. That's
Yeah,
awesome.
So now I believe,
Through FEMA. So
yeah.
like any agency would be able to sell it, but they would only sell the FEMA's.
So there's no competition, right?
Everybody's rate would be basically the same, yeah. So now there's more private companies, which is great. So it depends on the loan program that you're using. If it's any type of conventional loan, you can use private flood all day long.
Gotcha.
If it's FHA or VA, I believe VA is now approving without.
Yeah.
Does that jive with your experience? FHA, I'm not sure if they'll approve private flood yet or not.
When did that start?
Definitively heard. I mean, it's always been around, but it's just, yeah, the mortgage, the loan programs are what kind of pull the strings. And
Yeah.
so we've been the ones that said, no, unless it's backed by the government, we're not
Right.
doing it. And so
I feel like it has to be
gradually
relatively
relaxed.
recent.
Yeah.
Yeah.
Yeah, and so I'm not sure why that is, but my guess is probably pressure from the industry saying, hey, wait a minute, why are we paying these ridiculous premiums
Yeah.
to subsidize the people in Florida that get
Yeah.
hammered every year?
And we don't ever need it.
Yes. Yeah. That would be
Yeah.
my guess.
That totally makes sense.
So flood, landslide, earthquake, if you have somebody that's buying on a hillside, like say out in Gig Harbor, for example, and you're kind of waterfront or on a hillside, you can get landslide insurance, and it really, cost on that depends on how close they are to the slope. Have there been any other slides in the area recently, that type of thing, but that can save somebody's bacon if they do have that coverage, because otherwise they are SOL if something happens. So, and the same thing with earthquake. We all know we live in a fault zone, so it's, yeah, when I'm consulting with clients about earthquake, I tell them, hey, here's the situation. We have the potential to have a big one. What you have to work through in your head is, okay, big one happens, my house is gone, my belongings are gone, I don't have earthquake insurance. What do I do, right? What then? What are my fallbacks? For me, it comes down to how much equity do I have in my house that I'm potentially gonna have to walk away from. Right, because Congress is probably gonna pass something and say, oh, loan relief, we won't jack your credit because you had to walk away from a mortgage due to this major earthquake event, but they're not gonna let you walk away with your equity, right?
Right.
So if you've got 200,000 or more in equity in there, that becomes a much harder pill to swallow, potentially walking away. So when I counsel clients, that's kind of how I frame it. And say, hey, this is what it is, this is what it costs, and these are the risks and potential benefits of having it. So
It's like umbrella insurance. If you don't have
Yeah.
much to protect, then
Right.
it probably doesn't make
Exactly.
sense. But when you start getting assets, it's like,
Right.
okay.
yeah, that makes sense. Exactly. So that's kind of how I talk about earthquake insurance. The other stuff that's not covered on home insurance is wear and tear type of situations. Things that have been going on long term, slow water leaks, stuff like that. Typically not covered. I know with real estate transactions that comes up, like we just had it for a guy moving down to Arizona. Bought a house in Arizona, goes to move down there, shows up with moving boxes, and the entire, upstairs has leaked into the downstairs, and all the sheetrocks, laying on the floor, bubbling. And so then the question becomes, all right, well, when did it happen? Did it happen before he closed or after he closed? Whose insurance, pays? How long has it been going on? And, that type of stuff.
How
But
do you prove that?
insurance companies are generally gonna talk to some water mitigation people, because usually, particularly in the Northwest, where it's more humid, we can get mold pretty quick. So if there's, no mold going on, it's probably been within 48, 72 hours.
Yeah.
If it's black mold everywhere, that's when the insurance company will say, whoa, this could have been going on for months. We didn't see it, we're out.
Yeah.
So typically it's 14 days is what the insurance contracts read. They have the right, if they think the water damage has been going on more than 14 days, to deny the claim if they want to. It doesn't mean they will, but they can. And the reason that's in place is just to avoid situations where people just neglect their home and then try to file an insurance claim. But unfortunately, it catches some innocent people in the crossfire, which is one of the reasons we have such a sterling reputation as an industry.
And another thing, even stuff that would normally be covered, let's say a tree branch falls off your tree and puts a hole in your roof.
Yeah.
It's absolutely covered by insurance. But if you're a homeowner and decide not to do anything about it, you see the hole in the roof, it's raining today and there's rain falling into your house, goes on for a few days, and you call your insurance company and say, there's a hole in my roof, plus there's water damage in my house now, days of rain. And you're like, why didn't you put a tarp?
Yeah.
What a reasonable person would put a tarp. So in your contracts, it also reads that the insureds have responsibility to mitigate any further loss. So as soon as possible, you get something up there to stop the rain from getting into the house.
Yeah.
What if it was like, let's say a drain pipe that was slowly leaking a bathtub drain into the crawl space, and then it's now started, and you just wouldn't see it, obviously, because when the crawl space started to like drip around and cause dry rot, and then all of a sudden your bathroom floor is falling through, and they're like, well, this has been here for clearly more than 14 days.
Right.
How are they still able to say that's on you?
Typically, yeah. Now, there are getting to be some companies, we have 2 carriers now that have a water seepage and leakage endorsement, where you can endorse either $20,000 or $50,000 in coverage for that very scenario. And so that's something that we talk to clients about all the time now. Is like, hey, this is one of the things that in the past wasn't covered, but you have the option for X amount of dollars a year. You can add that coverage on, which is great, because that was one of my biggest pet peeves. Because a lot of times it's that scenario, it's not their fault, they just don't.
Yeah, because that's not neglect, that's ignorance.
So that's a frustration, but just know, wear and tear typically isn't something that's covered. So the thing I was about is what affects home insurance rates, right? So, because it's something you guys can advise or maybe potentially head off or give clients realistic expectations. So let's go around the room. What do you think is something that affects home insurance rates?
Deductible.
Okay, what deductible you choose, that's important. That's a nice little thing we have to play with when
Age of the home.
right? Age, that can affect it. A brand new home, most companies are giving a pretty steep discount because it's much less likely to have a claim. If it's pre-1950, it's starting to go the other direction, right?
No longer credit score.
I'm glad you brought that up.
Sorry.
That swung back the other way now, and
We're flirting with politics all day so far.
I know. That is one of the most, the craziest things. So just so you guys know, up until last year in June, all insurance companies use credit as one of the main rating factors for home and auto insurance, because there is a very clear correlation between claims frequency and your credit score. Right?
Yeah.
But our insurance commissioner had long thought that was inappropriate and discriminated and racist, classist, all that sort of stuff. And he's been trying to get rid of it for years, but always kind of run up against the numbers that the insurance company would put out. But last year he kind of found a loophole through COVID and said, well, due to COVID, we're going to put a temporary ban on the use of credit scoring, because everybody's credit got affected, even though 10 years didn't, because of what was the act?
You talking about the stimulus package?
Yeah, well, no, they did a credit freeze, so people wouldn't get their.
And people weren't even getting calls from collection agencies and all that. You weren't
But
allowed
anyway.
to reach out to anybody.
That's what happened. They removed it. Insurance industry fought it, went back and forth a couple times, literally flip-flop 2 times in the last year. As it stands, it's still, in the courts and legislature, but insurance companies are now able to use credit again if they want to. So it could be a factor, it could not be a factor. we have probably 75% of our carriers are gonna go back to using credit, the other 25% aren't.
It'd
So,
be nice to see my automobile rates go down.
yeah, wouldn't it? We can talk about that later. But so yeah, so credit is a big one. Let's see, age of the home, size of the home, right? So, you know, it's kind of an no-brainer. The bigger the house, the more the coverage, the more.
But not like, I mean, it's still like almost the price per foot type thing, right? It's not like it goes up, like it's more, what am I saying? Is it based off
of
of
multiples now? It's
No,
just,
right.
yeah, if it's, you know, 300.
Yeah, 'cause there's more home to
3,000 square
insure.
feet,
Right.
yeah, it's gonna be a little bit less than if it's 4,000 square feet, right?
Location of the house.
Location of the home, but it's, can you guess what it's in location relative to that matters?
Fire department.
Fire department and fire hydrant, right? So,
Oh, that's crazy. I didn't know that one.
yeah, a lot of people don't think about
makes
that.
sense.
Especially if you're, you know, selling, buying around in the city, it doesn't really come up, but once you get outside city limits,
Mhm.
the fire department's, you know, 6 or 7 miles away, there's no hydrant. That customer is gonna pay maybe 30-40% more for home insurance than they would if that house was in the city.
I'm a quarter mile from the fire department.
I know.
Fire station.
It also depends on how your fire department's rated, so if it's a volunteer station, it
Oh.
doesn't help you too much. But that's something just to know if you're selling somebody that's out, you know, buying out the country, you know, they can expect a little bit higher rates.
Are insurance rates similar to lenders in the sense that like, okay, so lenders are, this might be a totally ignorant question, but lenders are kind of governed by the Fed to a certain extent. Like there's a rate from the Fed
Mhm.
and then like they can reduce their costs a little bit, but they're all kind of working with the same
Right.
foundational costs, or can there be huge
There
fluctuations?
can be huge fluctuations.
And why is that?
Carriers.
Because it's private, it's relative, sorry, yeah, I'll let you go.
No worries.
I was gonna say, so most insurance companies, they're either private companies or public companies. So basically the way that insurance companies make money is they take all the premiums, they put a portion of it into a kitty in case something happens. They pay everybody out of the kitty, the rest they invest and they make their money. So with that being the case, the government doesn't really get involved with insurance other than regulation. The price is set by each individual company and whatever their business model is. So, you know, the Vern Falks of the world, he made a killing going after the high risk people, charging them more, hoping that they didn't get in accidents, and it kind of worked out for him. And there's this State Farms of the world that they just get as many people as they can, high quality, low premium, but either way, each company sets their rates as whatever they want.
Okay,
So
so
they're
it's
filed,
totally different.
yeah, so
There
every
is a-
company is filed, their entire rating structure has to be filed through the state insurance commission. Okay, so it's pretty well set, so I can't just say, oh, yeah, you need a 10%, here, I'll give you a 10%
Yeah.
lower just to match the other rate. Yeah, they don't let us do that. But there are things like adjusting the deductible and certain internal limits that you can do to adjust the, you know.
I
cost
guess
a
that
little
is a
bit.
clarification. It's
Yeah.
not each agent that gets to set the rates. It's the company sets the rates, reports it to each state, and that really the agents have no control over
Yeah.
what the rates are.
Right. So then like American Family Insurance, they have like, they're really bound to like their, you know, their parent company, right? There's all these different franchise, are they even franchises or what are they technically?
I mean, they're just agency owners.
Okay,
yeah.
so there's all these different agencies, but they're really, their
Yeah,
hands are
they're-
really
they're all
tied
quoting
because
the
they're
same-
just,
Yeah, they're quoting the same product.
But then some company like yours, PNW Insurance Group, that are you guys like a wholesaler kind of? Can you go get
Call
it?
That so much, but we call it a broker. So
Right.
instead of just having one product like American Family or State Farm, I've got 10 to 15 different companies that I can quote through at the click of a button through our multi-rater. So the cool thing is we just put your information in once, whoop, and it rates through all those different companies. And then whoever's looking good, then I can actually bridge into their system. And
So that's really similar to lenders. If you
Yeah,
go to Wells
yeah.
Fargo, they're gonna have their Wells Fargo products, but if you go to a broker, or a lending broker, then they'll be able to offer different things due to what their lenders are offering them.
Yeah, even some mortgage banks, like there's mortgage banks like Fairway. Fairway lends it's a mortgage bank, it lends its own money, right? But they have investors that give it, but they lend their own money out. Gold Financial Services is a company I used to work with in Texas. They have their own money as opposed So they sell their own money, they can set their own guidelines. Obviously, they have to be in line with what the federal government is, but it's the same concept as a broker who just sends it out to 15 different companies, whichever rate typically comes back, whichever product is works for this particular house, at least one house, then they push the client that way.
I mean, I equate it to, like, if I still work for American Family, that's where I started out, it's like, it's just like, it's like just being able to sell FHA. From a lending perspective, I got one shot. Which is why I was like, after a year there, I was like, oh, well,
This doesn't make sense.
this is cool, but yeah, this is limiting, so that's why I went to the independent side. Like, yeah, makes sense. So the last thing on that list was claims history. So, and it's important for you guys to know, because this comes up, it's typically the claims follow the client, not the house. Okay.
Right.
So what I oftentimes see in real estate transactions is you get a buyer buying a house, and they get some flack coming back. Hey, there's been a couple claims on this house, and the insurance company that they're with may want to surcharge them for that or require proof of repairs or something like that. And we're seeing that a little bit more lately, but most companies that's not the case. So, so just know that if you have that come up, where your buyer is saying, hey, I'm buying this house, but the insurance rates are sky high because the prior owner had a couple claims. Alarm bell, doesn't need to be that way. There are plenty of companies that don't do that. So, however, what we do find commonly is people forget about claims they filed for, let's say, their car getting broken into when they had renter's insurance 2 years ago. Now they're buying a house. Well, that claim follows them around for 5 years, right? So that's going to jack their home insurance premium on their new house by 20-30%. So
That's
it's one of those unfortunate, things. And it's the reason that we always, talk to our clients about, remember, your insurance is for the big stuff. It's not for the little, $1,200 theft claim. Just don't do it. You will pay through the nose after the. So that's the last one. So claims history. So some common scenarios that we run into with real estate transactions that require either some special coverage or special knowledge. How many of you have come across the situation where somebody wants to rent back? Where you got a seller, they sell, but they need to stay in the home for X amount of time before your buyer can move in. You guys come across that a bit? Right?
Yeah, well, I mean, I guess I'll just say we have a recording from 2 or 3 months ago where we did a meeting with our attorney about this. And so if you're curious about that, let me know and I'll send you that video, because it's a very daunting video. Especially in a state like this that is very tenant friendly. So I'll preface with that. If you want to, I'll let you talk, Ryan, but if you want to learn more about this, you should watch that video. It's an hour-long video. Very good.
I bring it up just from an insurance perspective, but I would agree with probably this attorney's assessment that you should avoid it if you can. But if you do run into that situation and it is your buyer says, okay, that's fine, I'm aware of the risks, what they do need to do is they need to talk to their insurance company that's going to be insuring that house and let them know this is what we're doing, and then get that and get something in writing. If they say, okay, that's all right, because a lot of companies, if it's 30 days or less, they'll be okay with it, but you want to get that in some sort of writing, because sometimes the people that you talk to on the phone aren't the most knowledgeable. And they're not the ones writing the claims check.
Is that like day one? Like if you have like somebody who just need, like we close on Friday and they need until Monday, like you.
That I wouldn't worry about so much, but if it's longer than that, then I would say, typically what you'll see with insurance companies, if they're going to rent back longer than 30 days, then you're going to be talking potentially switching to a landlord policy in order to have the proper coverage. Because your typical home insurance contract excludes, liability and claims from tenants. Right. And so you got to be really careful with that, because now they're technically a tenant, the seller renting back and you own the house. So you just have to be aware, what's going on. So I was, like to point that out.
Can I ask a question?
Yeah.
What about, I mean, I guess the answer is just talk to your insurance broker, but what if you're house hacking? where you live in part of their house and you rent out a room or basement.
That was the next one on the list.
Oh, sorry. Well, it triggered that thought.
Yeah. So if you're just, renting out a room or part of the house and it's, a long-term rent scenario, that's fine. Typically, most insurance companies, you just add an endorsement on that extends coverage in that situation. Most companies will go up to like 2 or 3 boarders, tenants. If it's a situation where you're doing an Airbnb, however, that changes, right? So if it's short-term rentals, and you're renting out, say you've got a duplex and you're gonna rent the other half out Airbnb style, that needs to have, I would say, a separate type of policy, because more companies are just adding it as an endorsement, but that needs to come to light to the insurance company.
Right.
And it's gonna cost, a bit more.
Yeah. Airbnb people are rough. They do a lot of damage.
Yeah, that's why it costs a fair bit more than a long-term tenant, because the more tenants you get through, the more likely you're gonna get a dud that trashes the place.
Okay, I'm gonna argue against that as somebody who has multiple Airbnbs. Okay, here's the thing. First off, you got cleaners in there every 3, 4, 5 days, or every day sometimes.
Yeah.
So like you're fixing little things all the time. Whereas a long-term tenant who's letting their dog pee on the floor and scratch the door and been letting a leak go for 2 months and never told you about it. That's actually one of the main reasons we chose Airbnb before, like when we bought our fourplex, we chose Airbnb because the home was built in 1901. We just put a ton of money, like all the money we had in the world, painted ourselves and everything. Sean helped paint, and we were like, I don't want some annoying tenant to come like ruin this place.
Right.
So I'm gonna push back on that, but whatever, it doesn't matter.
You
The
had
insurance agency.
decent experience so far.
Sounds
right?
like
It's been okay.
But you sound like a good Airbnb, else you probably have house rules. What ends up
Yeah.
happening is, again, it just takes one dud, somebody to come in there and throw a rager, and now all
It's just
that
odds.
hard work is
Well,
gone.
we've had that happen, but for the most part, it's not enough to
Justify.
justify going to the deductible, because it's
Right.
like under
Yeah.
$5,000. And so it's like,
You
of
have
course,
the
I'm
right
gonna deal with
idea.
it myself. And we even had bed bugs at one time. That was the worst one by far.
Oh,
That cost $3,500. It was
Oh my
a lot.
gosh.
Yeah, it was terrible. But I mean, I didn't even consider going to insurance. I don't even know if I would have done anything about that. Probably not. Just because I like you guys. You brought pizza, but I don't like insurance. I'm very cynical. It's like, oh, we cover everything but that. But yeah, I don't know. That's always been my philosophy, is like, insurance is probably gonna deny it anyway, so just don't go there. I just go there if the house burns down. I'm like, all right, now I'll go to you.
Well, listen, that's kind of the right idea, and that's why I try to teach people on whenever I talk about insurance. Ryan mentioned it earlier, but I always like to highlight a little bit more in depth. It was never meant for the little stuff. It's not a maintenance policy.
Right.
It's meant for catastrophic losses. The way insurance actually started, and as quick as I can explain it, was back when they used to ship cargo to across the ocean. Well, people would throw money into a kitty saying, I'm gonna insure this barrel of whatever going on this ship. If the ship goes down, I'll pay you for the barrel, but if not, you give me a portion of the whatever, right? Everybody threw in, insurance policies started. So it was meant for a cat. It wasn't if, one of them fell overboard. It was if the ship went down, we got you covered, us collectively. But if not, you pay us, we keep a portion of whatever. So catastrophic loss.
And on that note, if you have a first-time home buyer who is not liquid, home warranties are a great thing, because that is what that's for.
Absolutely.
Home warranties
Yeah.
have very, very small deductibles. They don't affect your insurance, right? Okay. I was like, right. I started saying it and I just had this fear, like, did they get into that too? But yeah, all my deductibles are 10,000 plus, because I'm like, I don't want to be tempted if it's $7,000. I want to be like, no, that's why I did it, because it's a lower rate and it's like, I don't even want to think about it unless it's like 11 plus.
Yep.
That's a good mentality to have, so. But yeah, so that's Airbnb is one for sure. So service line repair issues, so when you guys are selling homes, particularly older homes in Tacoma, any home over 30 years, do you guys typically recommend during the inspection to do the sewer scope
Yeah.
function?
9 out of 10, yeah.
Okay, good. Because history plays out that is very, very worth doing. I've had so many clients over the years regret not having done that. And it's a, $10, $20, $30,000 fix, minimum 10. And that's if you're replacing a piece of pipe that big. So always recommend doing that. If the home's even over like 40 years, worth doing for sure.
And I'm sorry, not to take away from homeowners insurance, but since I brought up home warranties, most don't protect any plumbing outside of the foundation. So I know of some that do, but that's important. Because one time it happened where they waived their inspection. I told them not to, but they did. And then I said, well, I'm gonna buy my home warranty. And it sure as heck, the sewer line had a big crack. And I was like, no worries, you got a home warranty. And they're like, we don't cover that, because they're just as bad as the insurance people too. Their goal is to make the most amount of money without paying it out.
I can go off on home warranties. But however, so to dovetail off of that, though, many insurance carriers now do have a service line repair coverage option. Usually it's about 10,000. Some will go up to 12, 15. So that's another thing that we'll typically recommend if a house is over a certain age. We'll ask, hey, did you get the sewer scope done? What'd you find? They say, oh, it's just been fully replaced. Okay, well, don't worry about it too much. But so they just say, well, we didn't get it done, or we just, I don't know, it looks okay, and it's like, okay, well, now would be a good time to pay that $30 a year, have that $10,000 in coverage.
Right.
And the 14-day thing would not be relevant with that, right?
No.
Okay, cool.
No, because I've literally had clients lose their, have to move out because
They can't afford it.
their whole system was done and they couldn't afford the $20,000, and they just bought 6 months before, they had no equity.
Right.
So like a $10,000 coverage on that, that's after deductible or before deductible?
There's no, I don't think, usually there's either no or minimal deductible on those extras. Yeah, your normal deductible doesn't apply.
How generous.
Yeah. It's because they use third-party companies to actually make sure that.
I'm totally just giving you guys a hard time. I know you're just a messenger.
It's okay, trust me.
It's just cynical Isaac.
Yeah.
When it comes to
I
insurance.
always, every time somebody says country, I always think of that one. This is me with that Persian king from 300. He's like, I'm a generous god. Like,
all right, so that's service line stuff. Needless to say, just home inspections in general, I'm a big fan. Obviously, in this market, or at least up until recently, it was hard to even throw an offer out if you were going to do an inspection. But but we highly recommend it, because a lot of times you're going to find stuff that, if it's pre-existing before you buy the house, your home insurance isn't covering it. So you got one shot to figure that out, or you're paying for it.
Yeah.
Insurance for homes under renovation, speaking of renovations, that is something that we come across a fair amount of frequency, where somebody's going to buy a house and then, either they're serial investors and that's what they do, in which case they usually know exactly how the insurance goes, and we write a special, vacant home policy during the renovation. But a lot of times it could be somebody that just happened last week. Clients buying the house next door, he wants to turn it into a rental, but he's going to renovate it himself, and it's going to take who knows how long, 3, 4, 5, 6 months to get it up and going. And so I told him and said, hey, okay, I'm going to show you 2 quotes. I'm going to show you the quote after the work is done and tenants in the house, but here's the quote we got to go with right now, which is the vacant quote that's 3 times as much, but it covers you. And so the reason that's so important, and it's good for you guys to know, is home insurance companies have what's called a vacancy clause hidden within them. And to add to the cynical nature, typically it used to be either 60 or 30 days. Now they're getting more and more strict, and it's mostly 30 days. So if a home has been vacant for more than 30 days, certain coverages now fall off of that policy. So typically theft and vandalism, are number 1 and 2, because that's the most likely thing to happen when something is vacant.
Right.
And then certain water related coverages fall off as well. So you just have to, be a little bit careful when you're advising somebody, if they're, either selling or buying, and the house is going to be vacant for a while. that there's some coverage risk there. And I know sometimes it's tough to tell a seller, oh, well, your house has been vacant for a year. Ooh, you should probably look at a vacant home policy that's gonna cost you a lot more money. But it's just good knowledge to have if that comes up, and if you have somebody that's buying a house and renovating it for the first time, whether to live in or to rent it out, it's still important to know that those limitations exist, and that's why we have those vacant home policies, so. Yeah, so that's a good one. We talked about the taking possession and discovery damage. The last couple things I was gonna talk about, and I'll just open it up for general questions, would be, I think a lot of people don't really know that there are different tiers of insurance companies too, not just with car insurance, but with home insurance as well. So there's, as AJ alluded to, there's kind of the Vern Fonks of the world, and they deal with carriers that are what would be termed non-standard. So companies that might, insure homes that are not in good repair that your typical home insurance company isn't going to, in specialty situations. Manufactured home carriers is another one. If you've got manufactured homes that are over a certain number of years, usually over 20 years, you're going to be with a specialty company. You want to, I think if you can, you don't want to stay with a company like that. Just from years of experience and how claims go, they don't go well.
And that's where they get that stigma from the majority.
A lot of stuff, so that's one tier, you're usually only going to find that in a specialty situation. Then there's like your standard home insurance carriers. So huge majority fall into that range. So that's anywhere State Farm, Safeco, Red Family, whatever. They're all kind of standard insurance companies. Most of them run on a very similar, the same contract. And then there are kind of the high-end, higher echelon insurance companies. So if you've got a home that's over $1 million in replacement cost, it's worth thinking about, looking at companies like Chubb and Pure, Nationwide Private Client, companies you've probably never heard of, but they are kind of their own echelon, and not only in cost, because they do cost a little bit more, but the way they pay out. So if you've got a client that has, $1 million or a couple $1 million home, and they've had a not so great experience with their current insurance carrier on a claim, it's likely because that insurance company really isn't geared to deal with that type of a house. The finishes, the architecture, the belongings inside, their contract and their adjusters aren't good at dealing with that. And so that's why we have that higher tier carriers as an option, because they're the ones that are just going to cut the check, right? And just get it paid and get it done. One of the things that I do at the end of every year is I kind of survey and talk to all of my contractors and water mitigation companies and talk to them and say, hey, give me a feel about the different carriers, what's been going well, what's not been going well, anybody not paying out or change the way they pay things out. And they always, things change, but they usually then preface it by saying, well, except for Chubb, and they just cut us a check and they're great. And insurance, and clients have that same experience. So it's just good to know that there's different tiers of carriers out there. And I guess the last thing I was just going to say was, what should you expect from insurance agent, right? I mean, what do you guys think? What should you expect from an insurance agent or an insurance company?
I think education first and foremost, like educate the client. That's what's most important to me. Because I don't want to tell a client what insurance will and won't cover, because then if I'm wrong, it reflects poorly on me. So I'd rather refer someone who, is going to educate my client for me.
So education, that's a big one. That's a big difference between going through a direct carrier, like calling 1-800 number and having an agent, right? So that's part of it.
Yeah, I was just gonna say, being able to get a hold of someone.
Yeah.
If something happens, things usually don't happen within business hours. That's just how it is. So having someone you can get a hold of.
24 hours.
Yeah. So that's a big deal.
I think they need a good jingle. I mean,
No.
nationwide.
I tried to get Peyton Manning, but they stuck with agents.
Just saying, it's the only thing you're lacking, Ryan. You need a good jingle. Come on, man. Yeah, you brought pizza, so I'll look past it.
But all reality, so that those are kind of the bar and the reason you would have an agent. But there's a third thing that we do that I think almost no agents do anymore, and that is when it comes time and they have to use their insurance, you know, we want them to call, we want clients to call us first, right? So that we can walk them through the process, first off advise, you know, who to call, what to do, and then should they file a claim, should they not file a claim, give some advice there. But then say that they do file a claim, we're then that advocate and the liaison between, you know, the insurance adjuster and the client, because overwhelmingly insurance adjusters speak a different language than the client, right? You know, and they seem to, as much as I harp on this with them, they seem to assume that all clients have gone through hundreds of insurance claims too, and they haven't. Right? And so we play that role very well, and that's something that's pretty unique with us. Most insurance agencies are kind of, they're glorified salespeople at this point. You know, they do some education up front, but once that policy is written, there's a claim, here's a 1-800 number, you know, peace out, we're done.
I went
and
through
so-
my first homeowners claim a couple years ago. Yeah.
Yeah,
Ever.
because it is a pain in the ass. I mean, even the smoothest home insurance claim is gonna be a pain in the ass, just because it is. So having somebody to talk to say, hey, this is normal, this is what you should expect, it's handy. So I think that's kind of our unique selling proposition is like, yeah, we do the shopping for you, we educate you, give you advice, but then when you need to use insurance, right, we're here, you know, to help you through it. And that's, I think, really key. So, yeah. So it's us in a nutshell.
We can't magically appear like the State Farm commercials, so.
Right, I know.
No?
I'm still working on that.
Oh, okay,
Still
I'm
working
out.
on that. What questions do you guys have?
Do you do auto and all that?
Oh, yeah.
So my question would be when we're all done with this, we need to talk to you,
Okay.
because I've got an insurance agent, they handle all this stuff, but I'm always looking to
Yeah.
save money. And when we did have a claim, they pretty much gave us the phone number to call and then peace out.
Yeah.
And it was a nightmare.
Yeah. Yeah.
Well, and I will say I've used Ryan for years. Craig has as well. And also one thing I really appreciated was other insurance people. I told you up front and other insurance people, hey, I'm shopping, getting multiple quotes.
Yeah.
And sometimes I got like, you know, like a hard time for doing that. And Ryan didn't give me a hard time. Ryan got, you know, about half my, but it was depending on the race, but he got like my life insurance policy, my wife's life insurance policy. I think you have our umbrella, maybe, I don't know.
Yeah, so, yeah.
But anyways, and it was a really smooth process. It was really comfortable and yeah.
Well, I'd like to chat with you.
All right.
Yeah.
We can certainly do that.
Awesome. Well, thanks for doing this.
Yeah, you
And
bet.
yeah, when we send out this recording, we'll send Ryan's contact information. But thank you.
Appreciate it. Yeah.
All right.
See anything I would